What's up, everybody? Welcome to another episode of the Scale Your Real Estate podcast. And today I have an amazing guest who's going to talk about how you can use life insurance and whole life insurance to invest in real estate. I personally have 3 of these whole life insurance policies. And while I don't believe they're the highest cash on cash returns, you're probably not going to get incredibly wealthy by just doing these. However, as Chris demonstrates in this episode, he's going to talk about how these are like forced savings plans and how they can really get you in that habit of putting money away where you don't see it. And then one day you wake up and you're like, yo, I have this money here and I can borrow against it and use it. So you're going to learn about that strategy. I absolutely think it's something to consider in your investment portfolio, and definitely something to consider for a long-term strategy for making a return on your money and then being able to pull that out and invest it in real estate. But there's also a cool guest. My wife comes on, and for the first part of the podcast, we actually start talking about a subject that I didn't even know Chris was an expert in, and that's investing in other countries. So for those of you that might be feeling the uncertainty in the market today in America, and you're like looking for some of these alternative investments, kind of like, I specialize in co-living. That's an alternative investment right now, but so is outside of the United States investing. He talks a lot about that and how to get started. And we just have a fun conversation about some of the projects that Chris is involved in. So hopefully this episode inspires you. You'll get to see my wife jump on. We just kind of had a little spontaneous chat at the very beginning. You'll get to see my wife jump on. We'll ask some questions and dive into investing in other countries. I really hope you enjoy this episode. Let me know what you liked about it. Let me know who else you want to see on this show. Is there a guest you want me to reach out to, or somebody that you want to get their perspective on co-living or something like that? I'd love to hear from you guys. Enjoy. Thank you. God bless. Tell Rachel real fast, because I remember us talking about this when we were chatting. Tell Rachel, why are you sold on that area so much? DR, why are you sold on the DR, and like, why are you putting some of your eggs in that basket? I know not all your eggs in that basket, but like, why is that like a big focus for you right now?
Yeah, so it was just kind of relational. We connected with some people. One of the larger landowners down here wants to partner with us, but the biggest reason is it's one of the I guess philosophies that my real estate mentor Mike Wolf always told me is like, you got to invest in the path of progress, right? And so it's I'm a little worried about the U.S. right now as far as like valuations, and I think the economy is very, very fragile, and like, I wouldn't put my money into U.S. real estate at this moment in time. We sold a couple properties. I personally would just hold tight for a little while, because I think the economy is going to go through a real hurting, and I think there's going to be a lot of opportunity on the other side of that. But now is not the time to do it. Yeah, at the same time, I don't want to wait, right? Like, I wanted to deploy money and get projects going, and this is just an opportunity where the Dominican government is putting over $100 million into roads and infrastructure into the Samana Peninsula here, and they're really investing in the development of this. They want this to be their next big tourist area, and so we're probably 3 years ahead of it. And so the fund that I'm launching is going to have like a 4-year hold on money, because we're going to be developing some stuff, some resorts. We're buying a hotel. We're going to fix it up. It's being mismanaged right now, but it's beautiful. If I showed you videos of it, it'll like, follow me on Instagram, because I'm hiring this film crew to follow my wife and I around with my developer. And we're going to go to all the projects that we're going to be working on, and we're creating content around it all to help raise money for the fund. It's going to be like, literally starting Sunday, we're going to spend 5 days just creating content, and like, it's going to be awesome.
Didn't you say they were also putting in, wasn't there an airport coming to that area too? Like
There's an airport, and in November they have a cruise ship port 15 minutes from here that's being installed.
Nice.
So like, everything is growing up. Like, everything's blowing up, and we're at the very front end of this. Yeah, probably. But like, we have the opportunity. I don't care. I'll take advantage of it. Exactly. They get enough. So it's just, it feels very like, just fortunate to have met the people that we met and to have this opportunity. And it's really cool, because like, this town there's 152 residents. That's it in the whole town. And they're very indigenous people. Like, this town didn't even have electricity until 2011. Like, this town didn't have internet until August of last year. Like, it's one of those things, like, so the opportunity is so ripe. Like, we're able to build, like, just to give you an idea, the raw costs on the buildings. We were able to build 5 houses that are like 2-bedroom, 1,200 square feet, you know, like nice, good house, but like really nice finish touches and all that stuff. Every house has a pool, you know, all that stuff that goes with it. And we were able to build 5 of them for like $450K.
Let's go.
You know, so it's like, it's pretty cool and now, you know, but you
including
can't get financing, including land, man. So we were able to do that.
How close to the ocean on those?
Half a kilometer,
so you can walk to the ocean.
Yeah. It's like a 3-minute walk, you know, and it's one of the most like isolated beaches you could ever imagine. And it's just so cool because it's got a river running into the ocean. You've got literally on one side, you have the waves breaking that you can surf in the wintertime. And then on the other side, you got like a freshwater river with a beach on there. And it's like literally 2 beaches in one.
Right.
And it's got a whole cave system with a freshwater spring coming out of it that runs into the ocean. It creates a pool in the beach. It's freaking insane.
My wife said, when do we get an invite? But I'm pretty
sure you've already come down. Let's go. Yeah, come down whenever you want. Seriously, whenever we're... Yeah, you have to come down.
Like my ideal day is like Sam could tell you, we visited Mexico. We've been able to fortunately leave winter now, I think 3 years in a row. So this last season, we were only here, grand total, like 3 or 4 weeks in the whole winter months. And we had like 3 months in North Carolina. I love being in my ideal day would be like getting up, hot cup of coffee, bikini, and going and practicing yoga, like surfside or like under lava somewhere with like monkeys.
I'll send you guys some of the pitch decks with the renderings of the properties and like everything that we have going on. It'll blow your mind. Some of the stuff we're actually looking to. How did I what?
Sorry, go ahead. It lapsed a little bit with the internet, but
no, you're good. I was just saying we're going to be building, like I'm looking to the ayahuasca retreat in Colombia. We're looking to get a shaman from his tribe to come up here and start an ayahuasca retreat here. Integrate that with like a yoga retreat, ayahuasca retreat. You know, just like an overall healing center and focus on that. And there's we've got all the land already. We have, and so now I'm just waiting on the docs because I'm working on the fund right now. I've got the LPA, the PPM, the thesis for the fund, all that stuff that I've been working with the attorneys on. I'm about 40 grand into getting this damn fund created legally.
I know, dude. I know. A lot of people don't do those type of funds for that reason.
Right. But that's where the opportunity is. That's where the opportunity is. Right. And so, you know, because like what's happening is there's one other group that's raising money here. But the problem is like, if you were to look to invest down here with them, you have to literally send your money out of the country and give it to them. And so then there's a lot of risk that comes with that, right? Like you don't have all the protections of investing in the United States. I mean, risking internationally is risky enough, right? But sending your money out of the country, now you have no protection, legal protections or insulations or anything. And it's kind of like buyer beware. But with us, the way we're doing it, and the reason it's costing me so much money to set it up is because I am setting it up so it's going to be U.S. entity owned property down here. So there's going to be multiple layers to it. So you can invest in the U.S. but participate in owning Dominican cash flow from Dominican properties.
I think this speaks to, you know, we're seeing a lot of uncertainty in the market. I just want to echo your feelings and thoughts about the U.S. market. We're seeing a lot of uncertainty, and I'm seeing more and more of this. I'm just going to call it alternative investing, and that's overseas investing. One of my good friends, who's a capital raiser, they just started launching a couple of funds for India, and you know, it's very similar to what the interest we're seeing in co-living. It's like a very niche alternative thing, right? And it's just like people are hungry for those types of things. Not to mention the normal things are not getting, like you mentioned, evaluations. Like the normal things are just not getting. I would be scared to invest in a big multifamily building right now, you know, that has 3 or 4 years left on their interest rates, and then it jumps to 7% or something, you know. So I think I'm fascinated. I'm fascinated by the alternative investments, and I think we're only going to see more of that grow as people look for other things to put their money in that they feel is safe, they feel is getting good returns. So.
Yeah. I mean, I think that's the big thing. People are looking for the safety, but people I think are also looking, and one of the things that attracts me to down here, I think what you're doing really leans to the safety too. Is like there's always going to be a need, right, and protection. Like if you want to stay in the U.S., I think what you're doing is just brilliant. For me, I'm kind of going after a different investor, right? Like the stuff down here is going to kind of like be multifaceted, right? So the person I'm looking at to raise money from is the person that has money that they don't need to use, that they're looking to diversify and expand outside of the United States, which is an opportunity, that maybe wants like a kind of a backup plan. You know what I mean? Because one of the things that we're going to be able to do is anybody that invests with us, we're going to have homes and we're going to be able to convert at the end, you can convert it into like a plan B, so to speak. If you want to expatriate and get out of the United States, you'll be able to do that inside of our fund. It'll be like a self-completing plan.
Wow.
Right? Yeah. And so there's nobody else
How
doing
will that
what we're
work?
doing.
Will it be like
it doesn't exist?
What are the mechanics of that, man? Is it like if you invest $500,000, you get a house at the like how does that work? I'm really fascinated by that.
So what we're going to do is we're going to create fair market values on every home. And so as you put the money into the fund, rather than, you're going to get the cash flow on it, right? Let's say you invest $500K, right? You'll have the cash flow on that fund, but then you can also convert some of that at a fixed rate, right? Because you'll have the cash flow on the real estate, but we'll also appreciate it at a fixed rate of 10% per year, because that's down here, that's very conservative for the growth and kind of like the floor that we're starting at. So we'll appreciate it at 10% per year. And then let's say they wait 5 years. And then, so if we buy a house for 100,000 and they're investing in it, they cash flow it the whole time, and they'll be guaranteed to convert a portion of their $500,000 investment for that home. And then whatever, they could cash out the rest if they want, or they could take 2 homes and bring a brother or sister with them or something like that. It's pretty cool, and it basically locks in, they'll have access to the properties. Got these bugs around me, but so they'll have access to all that, man. And the cash flow, dude, we're like the first models that we've done with these Airbnbs is with only a 30% occupancy rate. We're going to be cash flowing over 24%.
Wow.
At only a 30% occupancy rate, cash on cash return of over 24%. So it's pretty baller. It's exciting.
So when does this first round get done? When can you start accepting guests at the first round? The ones you're building now.
So I'm a guest on the first round that we personally funded. It's not in the fund, but end of July.
End of July. Okay. Is it hard for you to get financing for projects down there, or did you have to go?
It's impossible.
It's impossible.
Yeah. It's for foreign investors, it's virtually impossible.
Did you have to do all cash with these last 5 homes, or how did you find it? How are you?
Policy loans.
Policy loans. Great
segue.
From the whole life insurance. Because I just started recording, man. Because I wanted. Yeah. Inevitably, I end up
you're good.
Guest on here, and I just start having these organic conversations, and I'm like, I wish that was on the podcast.
Yeah, you're good.
That's great. Hey, before we go into that, because that is a nice segue into policy stuff, which is what I want to deep dive. Do you want to ask him? Did you want to ask him one more question? Yeah, Rachel wanted to ask you a question or two. So
yeah, sure. Yeah, absolutely.
Question.
2 questions. Okay. Well, first, I don't know about 2.
Okay. I'm taking over Sam's podcast. First question for you. 1A is, was this a passion project at first? And number 2, how did you get your wife on board, or was she like the visionary and she's integrated? Like, how did that?
Yeah, no, it's a great question. So it did start off as just kind of like a passion for us. We were looking, well, I'll tell you a quick story. So when I first heard about it, I was looking to just deploy money, buy an investment property. My wife and I have always wanted to own something in another country. In 2021, we looked at Costa Rica, really, really heavy. We went down there for a month. We spent time down there, looked for places, had almost put an offer in on a place, but then found water rights issues, and that scared us away from it. And it was just like, all right, it's not meant to be. And so then what we did was we just kind of held tight. And then this opportunity kind of came about. And my business partner had actually done some work with a developer down here. Back in 2014 through 17. And then he was like, hey, you have some money you want to deploy, but you don't want to do it in the US. Would you be open to Dominican Republic? And I'm like, heck yeah, I would. He's like, oh, let me make a phone call. Literally, he made a phone call. That afternoon, we talked to the guy, and 3 days later, we're in the Dominican Republic, like walking through the jungle. And my wife and I came down with us. Yeah, we were like, boom, boom, boom. It happened so fast. And literally, when we walked out there, we had to walk through about a half of a mile of jungle, like just to get to the place, because there were no roads. So he's walking us on his phone, like showing us like, these are all the plots that are going to be all over the place. And I'm like, bro, we just walked through a half a mile of jungle. How are you going to get, like, what are you talking about? And so he's like, no, I'll just create a road. I'll build a road. Like, that's kind of what you're going to be funding. Like, he's like, that's why we need your money and that's why we're giving you like a deal. Cause he gave us the first ones at cost because like, whatever, super high risk, super like, it's hard to get somebody to, cut a check like that. Right. Like for that kind of like risky thing. And we were just like, all right, let's do it. Let's give it a shot. Like I met the guy like 3 days later, we made the transaction, and my wife and I were just, and so the whole idea was, I didn't think it would ever turn into something more. I thought it was just going to be for us. I thought we were going to have a couple houses. It was going to be our kind of summer plan. Being in Arizona, we like to escape in the summer, not the winter. So it was going to be our summer plan. We were going to come down here, take our kids out of school. And now it's looking like we're going to actually be relocating our entire family down here for about a year as we launch the fund and get this going. So it's all just kind of happened.
How about the dynamic between you and your wife? Is she kind of like along for the ride in it? I'm just curious. I know my wife is curious about that because we're always working on our dynamic.
We work on everything together, pretty much. I mean, she stays out of the life insurance business at this point in time. But on the real estate side, we do everything together. This is a total passion project. She's learning Spanish. I suck at Spanish, and it's like absolutely essential down here to know how to speak Spanish. And, and so she's like taken on the communication side of the Spanish to be my like interpreter, so to speak. But she's also a licensed real estate agent. We've done a lot of investing together. She loves that game. The game down here, as far as real estate investing, is completely different. I mean, like the way that we had to go through surveys to drill the well and do all that stuff, like it honestly is anxiety driving because like nothing is done the way it's done in the US. So you need to make sure you have the right team, the right people, and it's kind of crazy, but yeah, we're doing everything together. She's kind of, I would call her kind of my strategic advisor, right? Like she's really good at finding deals, finding opportunities. We do things together. And so, I mean, on paper, it's my show. Like I'm doing everything, but like behind the scenes, she's kind of like my second brain.
That's cool, man. I can relate to that.
Beautiful mastermind.
Rachel's really good at like, I'll be thinking about doing something for years. I'll be like, we should do this. We should do this. We should do this. And I'll just talk about it. Cause I'm like, I can be very analytical sometimes. So I'll analyze it. And then finally she'll just get fed up of hearing me talk about it. And she'll be like, oh, I just started this thing. Like we're doing this thing. I was like, okay. Like I talked about doing a camper van. We wanted to go camper vanning. I was like, I talked about it for years. And finally she's like, we're buying a camper van.
Yeah.
We're doing this.
I love it. That's perfect.
So that's really beautiful. Well, what advice would you have, just to kind of put a bow on this section, what advice would you have for somebody who does want to invest overseas before we get into the policies and how life insurance can be a really powerful way to invest, and especially in the way you're doing it, which these alternative investments that may not be able to be funded conventionally. But what's your advice for someone who's like, I've always wanted to invest overseas. I could see myself one day relocating or having a second home. Like, how does someone start that journey? Obviously you have a fund. There's option one, right? But like,
yeah. Well, I don't have a fund yet. I will in the next 60 to 75 days. Though.
Okay.
But awesome. I think it's just do your due diligence, get there. It's very people driven, right? So you got to trust the people that you're in business with, right? And so that's one of the reasons that I'm relocating my family down here, is because, I trust the people I'm working with, the project that I'm doing right now, the money that I've personally put into this and that my business partners have personally put into this. I'm comfortable with that. I'm comfortable with that because of the developers that I know, because the location I was comfortable with, and just all the dynamics there. But when we start talking about raising millions of dollars of other people's money and me taking on that responsibility and liability, I'm not going to chance that to anything. Right. Like, so, and I think that's one of the unique components of what I want to do is I want to move down here. That way, I have my eyes and hands on everything. Every day I can go walk the job site. Every day I can, like the hotel that we take over, like I can have like direct contact with the manager. My wife is going to get really involved with, operating and managing a project and like overseeing some of the interaction with some of the guests. We have a lot of opportunity with that. And so I think it's just knowing where you want to go, spending time there first, building relationships with the people, because people are either going to make it amazing or they're going to screw it up. Right. And the other thing I would say is that every country has different laws. Like we're also looking at some opportunity in Colombia. And so the laws between the Dominican and Colombia are completely different, right? The way that their legal setup for the way they do their titles and their deeds and like all the different things, it's completely different. So you have to find a local attorney that you can deal with. A lot of times they try to get you to just do these things on a handshake, and it's like, you got to do your due diligence, work with a local attorney that specializes in this stuff. So they vet it. It's going to cost a little more money up front than it does in the US to do that. Because they don't have this stuff as systemized. There's no MLS. There's no like major listing system that just you can build and run comps against and all this stuff. So you got to spend money on an attorney to figure all that out first and make sure all the zoning is right and the deeds are done right and the titles and the, everything is dialed in the right way. Otherwise you could end up, there's some properties even in the town that I'm in. There's all these, for sale signs all over the place. Right. And doesn't mean that those places are titled and deeded properly. Like a lot of those people have just like been here because of this is like indigenous land, right? A lot of those people have just been there for decades. And so they just think it's theirs. They've literally built a house on it, but they don't have any legal titled rights to that property. And so like you could buy it and then be completely screwed. Like, as a foreign investor. So you need to make sure you hire the attorney, they do the research, they figure it out, make sure it's all dialed in. That's just the stuff you got to do your due diligence on way ahead of time. And everything moves a little slower. So just be expecting whatever's going to take 3 months in the US is going to take 7 or 8 months here.
Wow.
That's great. It's amazing. It's amazing how many podcasts I've done recently, man, where I'll be interviewing someone and it boils like relationships seems to be the foundation of it, like be a good person, keep your word, and then be in places where people are like, I remember when I had that mentality switch of like, man, like 50 to 80% of my job should be meeting people, developing relationships, having conversations like this, coming to see you in the DR, seeing your project.
Let's go.
My God, right. I know it's for fun.
We're here till June 9th. If you can make it, I'm saying, just come on. She's going to go book a flight right now. We're here till June 9th. Come on down.
Yeah. I just want to put a bow on that. I feel like, my decision recently has just been like 50 to 80% of my job in this stage of life that I'm in is in real estate, and all this stuff is building relationships, and developing those relationships. So it's really, really, really powerful. I love that you're saying that. I'd love to transition to life insurance a little bit because I wasn't even planning on setting it up like that, but I was like, hey, how did you finance these things when like conventional financing is just not going to work there? And you said through policy loans. So could you tell the listeners a little bit about, man, I don't even know where you want to start exactly on this other than how can life insurance, most people I've found that are not sophisticated investors have no idea that life insurance and an investment strategy go hand in hand, right? They just don't know. So I'd be love if you would kind of explain the strategy and then go into like why you think it's important for someone to consider this in their investment strategy.
Yeah, I mean, I think it's like anything else. I would say this: it's not for everybody. It's for the individual who wants kind of an alternative way of doing things, right? Like somebody, and when I say alternative, I mean outside of the stock market, outside of mutual funds, outside of your kind of like pseudo traditional investing strategy, right? Like if you're into real estate investing, if you believe that controlling your money is probably the most important feature that you want to have or attribute that you want to have in your money with any investment that you make, then this is a kind of the best strategy I could think of, right? Like because control has different value to different people, right? Like there's a lot of people compare. I think the people that don't understand it or don't like it, like your Dave Ramsey's of the world, your Susie Ormans of the world, that will say like, oh, like whole life insurance is not a good place to keep your money. They're looking at it as an investment. Whole life insurance is not and should not ever be considered an investment. It is a savings alternative. And the reason I say that is the difference between saving and investing is just a function of risk, right? Like, I think we can all agree so far in this conversation that I have a pretty high risk profile. Like, I'm willing to come down here and do crazy stuff and risk my own money and do all that. Like, you have to take risk at some point in time to knock it out of the park and to get massive returns, right? Like, there's no way around that. However, I believe that I want to take and put my money at risk in things that I understand, things that I have a direct control over. It's kind of like you, like what you do. A lot of people when you first started would have probably said, dude, you're crazy. That's risky. It's so alternative. And like for a lot of people, they probably couldn't wrap their mind around it. But because you mastered it and you educated yourself and all these things, and you had a way of doing things, you were able to create a result based on a skill set, and you had to develop that skill set first. And so for me, it's the same thing. It's like, I come down here, I invest in myself, I take the relationships, I develop them, I find opportunity, and because of that, I'm able to create this other return. You know what I mean? And the only way I was able to do that is by saving money first. And rather than investing it, I save in a policy. I use my policy as like a banking alternative. And then when I want to go down here, because no bank is going to lend me money to invest in the jungle, in the DR, you know, where there's no roads and there's no real infrastructure, right? Like, it's going to come, but I want to be ahead of it and I want to take advantage of that opportunity. While having money in my banking policy, I can now borrow against my policy, leverage that. Let's say I needed $500,000, right? I could borrow, if I have my policy capitalized, my first goal, I should say, is to capitalize my policy, to capitalize my bank account. I can only leverage it to the amount, to the extent that I capitalize that account.
When you say capitalize it, you're just basically
meaning
put money in
it. Fund it. Yeah, put money in it. Exactly. So if I got $500,000 in net cash value in my policy and I can borrow 500 grand, I have instantaneous access. And so I always kind of tell people, like, opportunity finds you when you use this strategy. I'm a big believer. This is just a fundamental belief of mine, is that financial structure is more important than going and chasing returns, because most of the time people go out and, we're taught the younger you are, the more risk you can take. And the reality is the younger you are, the less risk you need to take. You got more time and compounding and everything on your side, right?
Beautiful perspective. That's a beautiful way to say it. I agree with that. You don't need, right? You're young, don't go gamble, which is what a lot of people take what they say as that's like a permission to go gamble and just throw all their money in crypto and hope it goes up, and throw all their money in this. And it's just like,
totally.
You lost it all.
Isn't it mind numbing though? So only in the financial industry, think about this. Only in the financial industry have we been sold this line of goods. Like, yeah, go out. Like, what is risk? Like, let's think about risk. What is the function of risk? The greater the risk, the greater the reward. But also, if you look at it statistically, the greater the risk, the greater the chance of loss, right?
Yes.
And so when you think about having a higher chance of loss, and we think about, everybody knows you got to take advantage of compounding interest, right? We got to take advantage of compounding growth. Well, what is the greatest negative impact of growth? Compounding growth is losses. And so, like, increasing your chance of risk, i.e. increasing your chance of loss, like, only in the financial world have we convinced people that to reach your success, you have to increase your chance of loss. It's mind-numbing to me.
Sure, yeah.
But so this is where I kind of teach people, is like, build your financial foundation of safe money. That way you can actually take risk and be an investor. Because if you don't have your foundation, and this is why I love whole life insurance and utilizing it as a banking alternative, because it's going to beat your savings account. You're going to have a lot of different benefits on top of it, but you're going to have that foundation of guaranteed liquid accessible capital when you want to take risk, and then you leverage that money to invest. And now when you go invest, you're actually an investor. If you don't have a foundation built, a buffer built, and you just start investing in high speculation, like if I had no savings and I started investing down here, that's not investing, that's speculation, and speculators get massacred in market cycles. We want to prepare people, to be able to insulate themselves.
Yeah, so this is brilliant, man. I love how you're describing this. So you're describing this as a savings vehicle, not necessarily an investment vehicle. And you're saying, hey, that's why Dave Ramsey or Susie Orman, they don't like this whole life insurance is the actual technical strategy. And you're saying that it gives you that buffer. Could you explain to someone new to this how you fill a policy? Like, I know that's very basic for you, but could you just tell them how it works? Because I think most people understand the concept of life insurance. Like, I pay money, and then if I die, my heirs get money. But how is it? How exactly is it a savings vehicle?
Yeah, so it's challenging because a lot of people think you put money into a whole life policy and you got to wait 15 to 20 years until you have access to any capital at all. The way that we design the policy is absolutely essential. So when you design a policy properly, and I can't get into all the nuances of what that means in this, but what I'll say is you have liquidity of about 90% of your premium. So if you have let's say, $20,000 a year premium, you'd have access to about $18,000 at the end of year one, right? Like if you fund it properly.
You'd have access to it in terms of being able to borrow against that 18 grand, basically.
Borrow against the 18 grand. Yep. And leverage that money, right? So I always kind of say, like, people are like, how much should I fund the policy? Well, it's like, what are your goals? What's your cash flow, right? Like, you can't draw blood from a rock, but everybody's different. And so what I would say is, like, how much money can you afford to save, right? Like, what everybody's different. What are your goals? Do you want to buy your first investment property? What time frame do you want to buy it in? Obviously, then you have to say, what is my cash flow? What kind of money what kind of assets do I already have saved? Where is that money saved? How can we maybe reposition that to be in alignment with this? Because we can do different things with the policies. Sometimes people just say, hey, well, I'll give you an example. I'll give you an exact example. We had a guy come, he flips businesses. He's a very successful business flipper. He's got a net worth of about $50 million. And he's like, Chris, I want to start implementing this for our business. And he's like, I want to front load $2.5 million into a policy, and I want to pay about $400,000 a year into a policy. Now, obviously, these are huge numbers compared to most people, and they can afford them and whatever. But the principle is what it is. I could say I want to fund it at $25,000 up front and $4,000 a year if that's what you have. Like, the relativity is all there, right? But for him, he puts in $2.5 million with a $400,000 annual premium, and out of that $2.9 million year one, he had access to about $2.6 million that he could leverage. And what happens is, I know, it's sick. And so he's able to do that for businesses, and then he could take the cash flow from the businesses. What happens on that $2.6 million that if let's say he leveraged it like 100% capacity, that $2.6 million is never going to stop being grown because you're not taking money out of your policy, you're borrowing against your policy, right? So you're going to pay the interest, you're going to pay an interest rate to the insurance company for borrowing your money. But here's the deal, your money is going to be compounding. That full $2.6 million is going to be compounding and growing all at the same time. So the net of it all is like free money.
So that insurance company is giving you a great interest rate to borrow that money because they know it's backed by an asset that they own. It's literally like in their account.
Yeah, it's like a cash back loan.
Yeah. It's a cash backed loan, which is obviously the most secure loan you could ever want for the insurance company to give it to you. I think there's a principle that people ask me all the time, like, oh, what are the steps to become successful? And if someone's getting started, there's this book called The Richest Man in Babylon. I'm not sure if you've ever read it, but it just talks about the basics of financial freedom and independence. And it starts with that. It starts with the discipline to put money away every month. And I think the most powerful way to do it, I mean, all the financial people tell you to do this, Tony Robbins teaches to do this, is like put money in a place where you can't get it super easily and have it be like a bill, have it come out of your account automatically like a bill. And like, for me, man, growing up, because my parents were really into Y2K and like the year 2000, they thought everything was going to crash. So my dad was like, my dad said, go buy a bunch of silver. And even though silver has turned out to be like the worst, it has not turned out to be like the greatest investment over the last 15 years. But what it has done is I couldn't sell it. I couldn't see a cool car and then just immediately go sell my silver. Cause like silver, like it has that, like you have to like sell it and this. And so I think this idea of what you're describing, I just want to try to extract the value of what you're saying for the listeners. And that is like, this is basically like a forced savings plan that feels like a bill. And then there's like all these extra bonuses around it. I mean, you haven't even mentioned, I'd love for you to dive into like, you also get life insurance, right?
You get, I mean, it's beyond that. Like, how old are you again?
I'm 32. And
okay, so
and for
32.
full transparency, I do have 3 of these policies. So like, I understand them, I get them, I love them. I don't even look at them and I'm like, oh yeah, like you even reminded me when we met. I was like, hey, I have this policy. And you're like, well, you could borrow against that for your next property. I was like, oh yeah, I forgot about that.
Oh yeah, there you go. It's awesome. Well, so think about it this way. Like, I don't know who your policies are with. It doesn't really matter. But here's the deal. And you probably don't even know this, like, because most agents are not educating their clients about this. But you have life insurance, which is great, right? Like, it's a life insurance policy. So you have it there. So your wife is taken care of, whatever. I always kind of say, this is a self-completing plan. Like, what you want to happen will happen when you want it to happen, whether you're here to see it or not, right? Like, so if I save money in a savings account, I think about, what do I want my wife and my 3 kids, what do I want their life to look like? If I'm saving in a savings account and I have something tragic happen to me, well, they have whatever is in the savings account. If I'm saving in a whole life policy, that policy on a cash basis over a 7 to 10 year period is going to beat my bank account. And if something tragic happens to me, like, like the financial goals that I have automatically self-complete. Everything that I'm saving for and working towards completes itself. Right? So that's good. But here's the other thing. I always kind of say, you can't solve long-term problems with short-term thinking. And one of the other things that saving inside of a whole life insurance policy and utilizing it as a banking alternative works for you is that you have living benefits. So if you become critically or terminally ill, you get diagnosed with a cancer or something of that nature. I don't know about you, but I'm super into like alternative treatment. I share the story. My father-in-law was diagnosed with stage 4 pancreatic cancer and given 3 months to live on November 4th of 2020. And I mean, literally the doctors and the oncologists were like, we may be able to give him to a year, but his quality of life is going to be horrible, blah, 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 blah. And my wife and I were like, no, screw that. Like, we're not taking that as an answer. Well, like, maybe we don't succeed, but we're going to fight like hell. And so because we had access, we're policy loans that you can access for living benefits on a tax-free basis. You can accelerate the death benefit and use it for alternative medical treatments. So, multiple 6 figures, we're talking over 200 grand in alternative medical treatments. My father-in-law is still playing golf 4 times a week, almost 2 years later.
That's awesome.
Right? If we had listened to the traditional Western world medical system, he'd be dead.
Wow.
And he'd probably have been killed by the medical treatment that was trying to cure the cancer.
Funded by this policy, or you're saying it could have funded if he had had
No, it funded by the policy.
Funded by the policy. That's amazing.
All medical treatments paid by the acceleration of the death benefit.
Wow.
I've been talking a lot about this. So like you and I right now, I'm 43, you're 32. We both it's going to be a while, hopefully, before we have to worry about that. But let's face it, at some point in time, you're going to get older. I'm going to get older. We're going to have the need for this stuff. We don't want to buy long-term care insurance and all these different things right now because it's it's hard to find the value in it. That whole industry is super volatile. And so having it as an extra kind of ancillary benefit in your policy is just icing on the cake. It's going to be there. Whether you think you need it now or not, the odds are you're going to need it during your lifetime. That's just statistics. And so it's super powerful. That's why I always call it saving in a whole life policy. It's like a savings account at a bank on steroids, because you're going to have all that. You're going to get about 10x return compared to traditional long-term savings rates in a bank. And you're going to get these other benefits. And when you break it down, I always kind of say to people, it's like, I don't tell anybody what they should or shouldn't do. I just say you should align your money with your values and beliefs. And so what I would ask you first is, do you believe you need an emergency fund? Most people will say, yes, I need an emergency fund. Then I would say, would you like to have an opportunity fund? So during market cycles, if you found any opportunity, like Dominican Republic, like any kind of investment in a market down cycle, that's when people get wealthy. Would you like an opportunity fund? Well, yeah, I think I would. All right. Where are you going to save that money? Let's talk about where you have guarantees, liquidity, all these things. And when you start backing out why you want this or what you want your money to do for you, you start to realize there's no other asset that will do for you what this will do. it becomes a no-brainer.
Yeah, the reason I got my policies was not, I realized I've actually never heard someone describe these as savings versus investing, because most of the guys that pitch me on it are like, they try to pitch it as an investment, and I'm an investor, so I looked at it from that way and was like, I'm not gonna get rich. This is not gonna produce that 40% return, the types of returns you're talking about in DR, but this is gonna give me some. I like to free myself to invest more aggressively. And this provided the foundation so I could invest aggressively, I should say. And then something else that I think I told you this when we met, I was like, something else that kind of got me is because I was young when I first had my first one. I was like 8-9 years ago. So I was, 20s. And I was like, life insurance isn't that important. But he basically said, this is kind of how it was presented to me. He said, look, man, these are guaranteed payout policies. So as long as, you don't run this thing completely dry, this thing's guaranteed to pay out the death benefit when you die. And he's like, that's kind of like a spend all your money while you're alive card. And I was like, what do you mean? And he's like, because think about it. If you know you're going to leave your heirs a couple $1 million, obviously, however big the policy is, then like, you don't have to worry about like saving for them, because as soon as you die, they're going to get the millions of dollars. Like, you can then like spend more while you're alive, and like you could use that for investments. You could do that to enjoy your life. And I just remember thinking about that and being like, oh, that's kind of a cool way to think about it.
It's true.
Present it that way, but I thought it was an interesting. Could you talk a little bit about how these policies get to a point where they eventually could self-fund themselves, or like you can put money in for a certain, at least, I mean, maybe if I'm misunderstanding it, please correct me, but from my understanding, you can fund them for a certain period of time, and then if something happens or you don't want to fund it anymore, you can stop, and it still continues to grow, albeit maybe not as fast, but it does continue to grow. Could you speak to that a little bit?
Yeah, 100%. There's different features inside of the policy. So when you buy a whole life policy with a participating mutually held life insurance company, you basically are the equivalent of a shareholder of a publicly traded company. So you get paid dividends participating in the profits of the company. So they pay out dividends to the policyholders. The whole life policyholders are the shareholders of the company. With a mutual company. And so when they pay these dividends every single year and they go into your policy, obviously they're directly correlated to the value of the policy. And so eventually what will happen is you'll see, and the way that we design them, typically it's between year 7 and 11 that this happens, that the dividend payout will be higher than your premium amount. So what can happen is you can say, all right, as soon as the dividend payout equals my premium, you can stop. It'll self-fund itself. You use the dividend to pay the premium and you're good to go.
Wow.
Like you don't, I would say, I always kind of tell you, like, once you hit year 7 in this, in these policies, you're never going to want to stop putting money into it, because you're going to look at like the efficiency of what every dollar is doing for you. The most inefficient periods of time with utilizing this banking strategy with a whole life policy is the first 7 years. Really, the first 3 to 4 years is the most inefficient, but that's where you got to think long term. Like, you're investing in it for a long strategy, and if you start looking at it for the first 2 to 3, 4 years, you're going to be like, it's kind of a wash. I don't know if it's worth it. But then you start stretching that out and looking 7, 10, 15, 20 years, you're like, holy crap, like this is huge. That's why, like, one of my favorite phrases, you don't serve long-term problems with short-term thinking. It's like, this is really, really an amazingly, it's like a secure leverage strategy is what it is. Like, imagine you can create leverage with almost no risk, but it just takes time to build that.
So you got to start building it. As you build it, you can then talk to us about a little bit about the transition of how you then use this. How do you think about these policies in specific? Because most of my audience and most of the people listening to this are probably going to be interested in real estate. They see that, they like that as a model. So how do you explain to people who are maybe more real estate heavy, want to be more real estate heavy? Yeah. How do you explain to them about this transition of then using it for that?
So it's amazing. That conversation has changed so much in the past, like, year and a half, with the interest rate environment changing as it has. And let's face it, the interest rate environment, let's say principles never change, right? Like, at the end of the day, the interest rate environment is going to be all over the map. It's going to go up, it's going to come down. It's going to be all over the place. We've seen interest rates for the past decade be at basically historical low levels. They're obviously coming up at this point in time. So whole life insurance companies just kind of like flatten the curve, right? A little bit, in the sense that, a year ago, 2 years ago, let's say, I would leverage a policy, and what I would do is I would say, all right, let's go use a third party bank, collateralize the policy, the value of the policy. And because the insurance company loan rate was like 4.8, 4.5%. And so if we could go to a bank and say, hey, get me a line of credit backed by this whole life policy, which you could do, is called the cash value line of credit. They'd give you 2.25%. Well, that's a no brainer. You know what I mean? But now what's happened is those lines of credit are now 8%. And, buying an investment property, you're talking 7.5%. Guess what? The whole life insurance loan rate right now, 4.8%.
Wow.
So it's now the cheapest money you're going to find.
Wow.
You know what I mean? And so it's like the whole conversation has changed. And so the bottom line is it's flexibility, and it gives you flexibility in all these environments. And I think my personal belief right now is getting as much money into there. It's not just about the return of the policy as far as the growth of the policy. It's about how you, as the real estate investor, and I'll just speak to them because that's what I am, that's what you are, that's what most of your audience is. It's about how you plan to leverage that capital. Because now as I go for the growth of the policy, okay, that's one function of the policy. But now it's like, all right, what are the alternatives? Because now there's hidden benefits in this policy if you want to leverage it, because you can get, let's just round it up to 5%, right? But if what's the value of being able to have 5% money compared to going to a bank and paying 7, 8, 8.5% for some of these opportunities, that difference, that saving, that arbitrage that you can kind of bake in there has a ton of value to it.
That's beautiful. So where does someone go if they get this and they understand this? Where does someone go? What's your advice to someone who wants to start a policy like this, or get their kid to start a policy, which would be so smart?
Oh yeah,
my wife and I don't have any kids, but if we, this is a long-term habit building,
totally,
savings strategy. And that's exactly how I saw it when I first got started. I love that you're preaching this. I love that you're getting the word out about this. And I know we could go into more nuances and details, man, but I think we've discovered it at a high level. We've talked about how you can use it for real estate. How does someone reach you? How does someone get in touch, or what advice do you have to someone who wants to start one?
Yeah, I mean, I would say educate yourself. That's one of the reasons I have my YouTube channel. It's at Life 180 on YouTube. I'm just a huge advocate of educating people. Never put your money into anything you don't understand. Take the time, work with a coach, an advisor, an agent that really understands the nuances of this stuff. Because I would say 99% of agents out there don't understand. Just you listening to this podcast right now, anybody listening to it, you understand more than 99% of agents out there. And that's really sad. It's really sad. But that's why I do what I do, is I educate people. And if you just go online and you search, I mean, if I'm not your cup of tea or whatever, you don't like my style, it doesn't change. The principle works. Go find somebody else that does. There's a lot of good people online that are talking about this. I say a lot, probably I could count it on two hands, the people that are doing it right online. But at the end of the day, I just am a big believer, do your research. That's what I would do. I would find somebody that knows this, and I would try to find other people to either confirm or test or, challenge the beliefs and kind of go out there. But it's it's the internet, right? You're going to find what you want to find. If you want to find things hating on this strategy, you're going to find Dave Ramsey and Susie Orman, all the people hating on it. But one of the reasons that this really resonated with me at the beginning is one of my first mentors told me, Chris, if you want to be successful, find people that are successful and that have the life you want to live, and emulate what they're doing until you have what they want. And I met this one guy, happened to be in Florida, and he told me this is what he was doing. And that's what got me going on it, and he was the most successful guy, I had ever met at that time. And it was oh my gosh. Okay. And so it's you got to realize no matter what you do, there's noise. So just use common sense, deduct your own conclusions, come up with a line of questions, and then reach out to somebody like myself or somebody else online or somebody locally or whatever, and be able to ask them questions and really challenge them. And if they can't give you straight answers, to figure out how this would work in your life, in your specific goals and objectives and what you're looking to accomplish in your portfolio or real estate investment strategy or anything that you have going on, then find somebody else. But that's what I would do. I would try to do my own research first, then I would find somebody, I would drill the hell out of them and question them. You know what I mean? And then just get comfortable, and then only then look at pulling the trigger on doing it.
Yeah. I've been pitched a lot on these policies by a bunch of different people.
Yeah.
And none of them have ever used it to invest in real estate like you have. And that is a huge value add for you to understand the nuances of how to then convert. I mean, if they've all told me, well, you can borrow against it, but that's totally different than like, let me show you how I use this to get into real estate. So I think that's a huge value of someone, going through you or talking to you about it. How does someone get in touch with you? What's the best way if they want to start the conversation with you about this policy?
Yeah, there's a couple ways. Just you can email me, chris@life180.com. And you can do that. The other thing I would really suggest everybody to do is I actually have a concept that I created called cash flow hacking. And it's all about leveraging these policies for the purposes of real estate investing and buying or you could really do it with any cash flowing asset, but we focus on real estate because that's just what we do. And I wrote a book called Cash Flow Hacking. You can go to cashflowhackingbook.com. And on there, Sam, if you put your email, they can put your email in the reference down in the box below. And what I'll do is I'll send them some extra bonuses, and I'll be able to hook them up. But all I ask you to do, you can buy it on Amazon. The Cash Flow Hacking book, it's like $24 on Amazon. It's $8.95. I just ask you to cover the shipping and handling. We cover the book and all that stuff. If you go to cashflowhackingbook.com, enter Sam's information in the referral box, and I'll put you on a list, and we'll get you some other bonuses, other training. I'm happy to get on a call with anybody that gets the book that has any questions, and answer. To me, it's all about, you got to have clarity about how this works. And when you do, and when it really clicks, you're going to be like, holy crap, like this is one of the coolest strategies ever. And, I'm like, I just sit, the more I do it, the longer it goes, the more excited I get, because I'm living this life. Like, it's just, I just feel so lucky, man. It's so much fun.
You are. Well, thanks for walking your talk, brother. Thanks for being a person of integrity and
thanks, brother.
Just spreading the word. And ever since I've met you, I really feel that you have a heart to give back and serve and truly come from a heart of service and contribution. And that's huge. So
thanks, brother.
Thank you.
Thank you. No, it was so much fun.